Hi, I'm Doug Jones at Doug Knows Real Estate and Mortgage Magic. We're creating an economy for the rich. And I've been a mortgage broker and a lender since 1968. And it's really discouraging to me that so many people, especially where I live in the Bay Area, cannot buy a house at all now. And like I say, we're creating government. I've always been a critic of government. I don't care what party's in there, because I'm looking for the person trying to buy a house and for the economics of the lower middle class in most cases. And you're shutting those people out more and more every day. I want to give you an example about a loan. In Silicon Valley where I am, a typical house, that's the price. And 1361625. That's about an average price right here of 3-bedroom, 2-bath house. And this 189.3 number is the Fannie Mae high loan limit. They have two loan limits. One is at $726,000, then the other one's $189,300. Well, if you buy a house this price and you go to the Fannie Mae loan limit, you put down $272,000, $325 plus closing costs, and plus I based in this one loan point. Okay, so a loan point would be about $11,000. The taxes on this house is going to be $1,418. That's going to be the same in all these examples. The insurance can be about $227, and it can be lower, but this is what the industry uses. And the loan amount is $4,304. So the total payment is $5,935, and based on a rate of a couple of years ago, 2.5%, it took $13,800 a month to qualify for that house. Now the rates started going up just about a year and a half ago. It was still at 3%, and the payment would have been $62.38, and that took an income of $14,500. Now this morning the rate is 7.75%, and that payment is $94.99. And now you need $22,000 a month, or $264,000 a year to buy that house. So we're shutting people out. We're creating an economy for the rich. And then what I mean is for the richest. I remember back in 1980s when you could go into a bank and buy a CD, a 90-day CD for 14 and 15%. I see them now at the bank in the building where I'm in right here at 5. And they're going up. It seems like they're going up every month. So the people who've got money, who can afford to invest, who can afford to put money in a bank, they're going to earn a high yield. They're going to be okay. People over here who can't afford the house, this person here, if they didn't buy 4 years ago, they're not going to buy now, because incomes normally don't go up that fast. So as I say, I'm really discouraged with the pricing. I'm really discouraged with the interest rates, and I'm really discouraged with government throwing money out here, causing inflation, causing interest rates to go up, and not being aware, and the public not being aware that this is all government driven. And it just frustrates me no end, because people don't see it. And I see so many people who would like to buy a house, they cannot. And if you live in San Jose area, most people are driving 100 miles out of the area and coming in. And we don't have the train systems like they do back on the East Coast, where people can commute in by train. We've got one rail going north and south of San Francisco, but that's it. And so these people are getting shut out, or they got to move way out of the area and try to drive here where the jobs are. So that's my rant and rave. I wish it were better. It's not. Do I see it getting better? I do not. This number stunned me this morning. Now, if this loan were below 726, the rate would be 7.375. And when you look in the newspapers, you're going to get the rate on the conforming lower balance loan. And that today is 7.375. So you say, wait, he's wrong. No, I'm not. That's the rate here. This is the rate for the loans over that limit. And in San Jose, this is 90% of our loans right here are above that limit. So that's my rant. I hope we can get this thing under control. I'm not encouraged by what I see, but I hope it does. I'm here to talk to you about mortgage rates, about housing, about everything. If I can assist you, I'll be glad to.